What if I told you that the country holding the most American debt is quietly, systematically, and deliberately dropping it like a bad habit? Sounds like a conspiracy theory, right? But here's what shocked me. China has offloaded over $300 billion in US Treasury bonds in just the last 3 years. And in early 2026, the pace is accelerating, not slowing down, accelerating. Now ask yourself this, if US Treasuries are supposed to be the safest investment on the planet, why is one of the world's largest economies running for the exit? Stay with me, because what I'm about to reveal is going to completely change how you see your savings, your debt, and why the financial system you were told to trust might already be working against you. This is Future Freedom 360. No fluff, no sugarcoating, just the brutal financial truth you deserve to know. Section 1. The setup. What are treasury bonds and why should you even care? Alright, let's start from the foundation, because if you're going to understand what China is doing and why it matters to your wallet, you need to understand what US Treasury bonds actually are.
Think of it this way. When the United States government needs money, and trust me, it always needs money, it borrows it. It issues these things called treasury bonds, and countries, banks, pension funds, everyday investors, they buy these bonds. In exchange, the US government promises to pay them back with interest over time. For decades, this was considered the gold standard of investing, the safest bet in the financial world. The idea was simple. The US will never default. The dollar will always be powerful. Your money is safe there. Now, China understood this game very well. At its peak in 2013, China held over $1.3 trillion in US Treasury bonds. They were the single largest foreign holder of US debt. Essentially, China was one of America's biggest creditors. America owed China an enormous amount of money. That relationship gave China leverage, and it gave America a reliable buyer for its debt. It was a mutually beneficial arrangement, or at least that's what everyone told us. But here's where it gets interesting. Since 2014, China has been selling, slowly at first, then more aggressively. By January 2026, China's US Treasury holdings had dropped to approximately $759 billion, the lowest level in over 16 years. That's a reduction of nearly $550 billion from its peak. Now, $500 billion doesn't just disappear from a balance sheet because someone got bored. This is deliberate, this is strategic, and the consequences for regular people like you and me are very real. But wait, there's something even more surprising than the numbers themselves. Section 2. Why China is selling, and this is where the brutal truth lives. People love to simplify this as a political move. Oh, it's just China and America fighting again. And yes, geopolitical tension plays a role, but that's the surface-level explanation. The real mechanics go much deeper, and this is exactly the kind of financial warfare that the playlist you're watching right now was built to expose. Here's the first reason China is dumping treasuries, and it's one that almost nobody talks about on mainstream financial media. Inflation destroyed the value of holding dollar-denominated assets. When the US Federal Reserve, empowering and uplifting with a steady, reassuring voice. When the US Federal Reserve printed trillions of dollars between 2020 and 2022 to manage the pandemic fallout, the purchasing power of every dollar-denominated asset dropped. China was sitting on hundreds of billions of dollars worth of US bonds, and they were watching that value in real time. The interest payments the US was making to China were being paid in a currency that was worth less every single year. Now, if someone kept paying you back in currency that buys less and less every year, you'd start looking for a better deal too, right? The second reason is what I call the weaponization wake-up call. In 2022, the United States and its Western allies froze roughly $300 billion of Russia's foreign exchange reserves after the Ukraine conflict escalated. Just like that, frozen, gone, inaccessible.
Now China watched that happen very carefully, and what they saw was this. US dollar assets are not truly safe if America decides you're an adversary. Holding hundreds of billions in US Treasuries suddenly looked less like financial security and more like a vulnerability, a financial hostage situation. You think that didn't send shockwaves through Beijing's financial strategy? Of course it did. And I'll tell you something that doesn't get enough attention. China has been buying gold aggressively. The People's Bank of China added significant gold reserves throughout 2024 and 2025, continuing into 2026 as part of a broader de-dollarization strategy. Gold doesn't have a country. Gold can't be frozen by executive order. That's not an accident. The third reason is the debt ceiling circus. If you've been following the news even loosely, you know the United States Congress has turned the debt ceiling into a recurring drama. Every few years, the government gets dangerously close to defaulting on its obligations because politicians use it as a bargaining chip. The credit rating agency Fitch actually downgraded US debt in 2023. Moody's followed with a downgrade in May 2025, stripping America of its last perfect AAA rating. Think about that for a second. The asset that was supposed to be the safest in the world is getting its credit rating cut. And China, a sophisticated financial actor, saw the writing on the wall years before most Western analysts admitted it publicly. But that's not the crazy part. Here's where we stop just talking about what China is doing and start talking about what you should be doing in response. Because this isn't just global finance theater. This has direct implications for your interest rates, your mortgage, your debt, and your purchasing power. Wise money tip number 1. Understand that rising bond yields mean rising costs for you. Here's the mechanical truth. When China and other large holders sell US Treasury bonds, the price of those bonds drops. And when bond prices drop, yields go up. Yields are the interest rates attached to those bonds. Now, US Treasury yields are the benchmark for almost every other interest rate in the American economy. Mortgage rates, car loan rates, credit card rates, business loan rates, they all move in relationship to Treasury yields. So when China dumps Treasuries and yields rise, your debt gets more expensive. That 30-year mortgage you're thinking about? More expensive. That personal loan you're trying to pay off? The rate environment just got tighter. In January 2026, the 10-year Treasury yield has been hovering in ranges that would have seemed extreme just 5 years ago. This is financial warfare against the middle class, and most people have no idea it's happening. The action step here is this. If you are carrying variable rate debt right now, this is not the time to be passive about it. You need an aggressive debt exit strategy. Prioritize locking in fixed rates wherever possible. High-interest variable debt in a rising yield environment is a trap that will keep tightening around you. Wise money tip number 2. Stop assuming the dollar's dominance is permanent. The dollar has been the world's reserve currency since the Bretton Woods Agreement after World War II. For most of our lifetimes, that felt like a law of nature, like gravity, unstoppable. But it isn't a law of nature. It's a man-made agreement, and man-made agreements change. China and Russia are actively trading in currencies other than the dollar. BRICS nations expanded in 2024 and have been actively discussing alternative payment systems. Saudi Arabia is now open to pricing oil in currencies other than the dollar for certain trades. This is the slow erosion of dollar hegemony, and it happens not all at once, but in increments. What does this mean practically? It means that holding all of your wealth in dollar-denominated assets, bank savings, dollar cash, dollar-pegged investments, carries a risk that it simply did not carry 20 years ago. Diversification is no longer optional. It is survival. This is why smart money is looking at hard assets, why Bitcoin's narrative as a non-sovereign, borderless store of value gained significant ground through 2025 and into 2026. and why gold is being accumulated by central banks globally at the fastest rate in decades. Wise money tip number 3. Watch the bond market like it's your personal financial weather forecast. Most ordinary people ignore the bond market. They think it's complicated, boring, or only relevant to billionaires. That's exactly the mindset the system wants you to have. The bond market is the single most important financial market on Earth. It signals inflation expectations, it drives interest rates, and it reflects the confidence, or lack thereof, that the world has in a country's financial management. When major holders like China uplifting with a steady, reassuring voice. When major holders like China are selling, and when credit rating agencies are downgrading, and when yields are spiking, that is your signal to tighten your financial ship. Pay down debt aggressively, build liquid emergency reserves. Reconsider any long-term fixed dollar savings instruments that are losing to inflation in real terms. But before we wrap up, there is something critical I need to flag right now. Fraud alert, the scammers exploiting this fear. Fraud alert, pay close attention here. Whenever there is genuine financial uncertainty in the headlines, and China dumping US Treasuries absolutely qualifies as that, a specific category of predator emerges. I call them crisis profiteers. Here's exactly how the scam works in 2026. You see a YouTube video, a social media post, or an email newsletter. The headline screams something like, "Dollar collapse imminent, move your money now before it's too late." The urgency is designed to panic you into action before your rational mind catches up. They direct you toward unregulated offshore investment platforms, obscure precious metals dealers with inflated premiums, or unlicensed crypto schemes that promise to protect you from the coming collapse. And here is the red flag list you need to memorize. If someone is using global financial fear to sell you a specific product with a specific deadline and a specific return promise, that is a manipulation tactic. Legitimate financial education empowers you to make your own informed decisions. Scammers use fear to make your decisions for you. Also, be extremely wary of any de-dollarization investment fund or China-proof portfolio that you cannot verify through regulated, licensed channels. In 2025 and into 2026, the SEC and FTC have both issued multiple warnings about investment fraud schemes exploiting geopolitical anxiety around exactly these kinds of headlines. Protect your money. Educate yourself before you move a single dollar based on fear. All right, let's land this plane with the 3 things I need you to walk away knowing today. 1. China selling US Treasuries is not a political headline. It is a structural economic shift with direct consequences for your interest rates and debt costs. 2. Dollar dominance is real, but it is not permanent, and your financial strategy needs to reflect that reality starting now. And 3. In times of global financial uncertainty, the scammers come running. Know the red flags. Protect yourself first. Here's the question I genuinely want your take on. Do you think the US dollar will still be the world's reserve currency in 25 years? Drop your answer in the comments below. Seriously, I read every single one, and the debate in this community is always incredible. If this video gave you clarity that the mainstream media didn't, do me one favor. Hit that like button, subscribe, and ring the notification bell so you never miss a future Freedom 360 breakdown. This is your financial education. Guard it fiercely. I'll see you in the next one. Stay wise, stay free.